This is Alan Bush with ADMIS. In the stock index futures, we did see prices higher in the overnight trade. This ironically linked to weaker economic data out of Japan and out of the Eurozone. Basically, the thinking is that anything that shows weakness in any of these economies suggests that the central banks of these regions will be forced eventually to add more stimulus to their banking systems, which then in turn is bullish for the indices. But some of these gains now given back, this after some of the more recent U.S. economic reports coming in on the weak side, including the Chicago Purchasing Managers Index and the Consumer Confidence Index, both coming in weaker this morning. So stock index futures moving from higher on the day to lower on the day, but I would not be surprised to see a move back up to plus territory. Still thinking that the main trend is higher for especially for the broad indices, the S&P and the Dow, or as far as the main indices are concerned. Over in the foreign currencies, we are seeing the dollar index now advancing to a new 4-year high. This due to interest rate differentials, which remain favorable to the U.S. dollar. Pressure in the euro currency after inflation in the Eurozone coming in up 0.3%. Although that was the expected number, this is down from up 0.4%. So the euro currency very much underperforming the news. You'd have to ask yourself, why would the euro currency be so weak with a inflation number coming in as expected? And the answer has to be that there is more accommodation coming from the European Central Bank, which would undermine the euro currency. Also seeing the pound lower, this due to weaker than anticipated housing price data, and the yen under some pressure. We had weak industrial production numbers out of Japan, also arguing for more stimulus from the Bank of Japan. So from here, it looks like the dollar will probably remain firm. We continue to expect lower prices for the euro currency and the Japanese yen. And credit markets were a little bit lower, and we did have a low posted about 8 days ago and a very good bounce from those lower levels. Some profit taking earlier in the day, but now futures back to unchanged to a little bit higher in direct response to the earlier U.S. reports, especially consumer confidence coming in quite a bit weaker than anticipated. Still thinking that the main trend is higher for the 30-year bonds, still thinking that it will be much longer rather than earlier for the Fed to raise their Fed funds target, even though the consensus view is for the July of next year's meeting. Our feeling is that they will raise rates much later, which argues for the bull market in the 30-year bonds to remain intact. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.